So picture this, you find yourself the perfect house, but then you get a sinking feeling as you remember what your credit score is. And you start thinking, what if it's not good enough? What if it actually stands in the way between you and the home that you actually need? Now, in this video, we're going to learn how to unlock the secrets of your credit score so you can actually confidently navigate your mortgage options without feeling overwhelmed. And if we haven't met yet, my name is Ryan, and I've helped over 3,500 home buyers like you in the past 19 years figure out how to confidently make their home buying dreams a reality. By watching to the end of the video, you're going to be able to learn how to improve your credit score and what lenders like me are looking for, and how you can actually turn that number into an asset rather than a roadblock to get to the house that you want. Let's go ahead and jump right in. All right, first up, let's talk about what a credit score really is. Kind of think of it as your financial report card, and it's basically 3 digits, and it reflects your credit worthiness based upon your credit history. Now, generally, the scale can range anywhere between to 850. Now, I haven't seen anyone with a 300 credit score yet, and I haven't seen anyone with an 850 score yet, but we can all agree that the higher the score, the healthier your credit. So why should you care about your credit score? So actually having a lower credit score can actually be a real financial burden. So when your credit score is less than stellar, you can actually face higher fees, higher charges, and you could actually get denied for a loan altogether. No one wants to pay more than they have to, and no one wants to be told no. So the first step to fixing your credit score is actually getting your hands on a report. You can actually access it for free from several reputable websites. So Credit Sesame is actually a fantastic option I personally recommend. And you're entitled to a free credit report every year from annualcreditreport.com. So if you found this video helpful so far, make sure to stick around to the end and consider it an investment in your home buying education. And also, by hitting that subscribe button, you're helping the algorithm share this video with other first-time home buyers who need the same support. Let's go ahead and pay it forward together. All right, so now let's go ahead and break down the factors that actually determine the makeup of your credit score. So payment history is actually the biggest one, and it makes up 35% of your credit score. Now, your payment history is like your track record. Lenders look at whether you're consistent and reliable with making your payment. A late payment can actually hurt your credit score. By making on-time payments consistently, your score will go up gradually. The next biggest one is credit utilization, and that's about 30%. This is about how much credit you have available and that you're actually using. So aim to keep all of your credit card balances below 30%. So for example, if you have a $10,000 limit on a credit card, you want to make sure that you're trying to keep that to $3,000 or less. The lower your utilization, the better it looks to lenders. So length of credit is at 15%, and that's the next biggest one. This factor rewards experience. Having a longer credit score actually shows lenders you've had time to learn how to manage credit. And if you have older credit accounts, consider keeping them open, as it will actually help with your overall credit score history. Now, actually, we're going to stop here for a second. So I had a client that was building a brand new house. So when she first went into contract, we got her pre-approved, and her score was, just call it 700. Okay. So without consulting me first, she went and paid off every single debt that she had over the 6 months while they were building her house. Now, what happens when you're building a brand new house? The lender like me will go back through and reapprove you about 2 to 3 weeks before closing. Well, when we repulled her credit again, her score dropped from 700 to 650. Now, why did that happen? Because she had a long history of credits, credit cards, car loans, and those kind of things, but she closed all that stuff out. So her length of credit actually dropped like a rock. So all she had was one credit card that was paid to zero, but it was a brand new credit card. So her length of credit history actually shrank when she closed out all of her things. So if you're thinking about paying off debts before you go get pre-approved, you might want to reconsider that and talk to your lender first so you're not shooting yourself in the foot. And the second to last one is types of credit. Lenders like to see a variety of credit types like credit cards, car loans, or mortgages. A mix of credit shows that you're comfortable handling different types of credit, which can actually add a few points to your score. And the very last one is recent inquiry. So each time that you apply for a new line of credit, whether it's a credit card, a home loan, or a car loan, there is actually going to be a hard inquiry on your credit report, which can actually temporarily lower your score. So too many inquiries in a short period of time might actually signal financial stress. So try to space them out if you can. Now, here's something that I come across at least once a week. So if you're shopping for home loans, for example, you want to try to stack all of your home loan credit pools within a 2-week period. There's a lot of grace that happens within that 2 weeks, so your credit score doesn't go down as you're talking to different mortgage companies. So if you can put all of your credit pulls within a 2-week period, that will really help. So if you're new in the country or you're young, you might have some insufficient credit history. So maybe you're just getting started with credit, or there's not a lot on your credit report yet. So without much going on, lenders don't have a clear picture of how reliable you are. It's kind of like judging a book by its cover. So a solution is starting with a secured credit card. So you can actually put a deposit down, say like $300, and that's your credit limit. Think of it as training wheels for your credit score. Or if you have a trusted family member, you can actually see if you can become an authorized user on one of their credit cards. That way you can actually start building up your credit without opening up a new account. You can actually see a lot of parents doing this for their kids before they're adults. So that way they can have an established credit history by the time that it is ready for them to go out on their own. Next up is late payments. Late payments are like a bad report card. They can stick with you in quite a while. These can actually stay on your credit report for up to 7 years. And since payment history makes up the biggest slice of your credit report at 35%, even one missed bill can actually really set you back. And if you're a forgetful person by nature, set up automatic payments and set reminders for yourself so you don't forget. So consistency is key here. It's like showing up every day on time, which ultimately builds trust with lenders. And lastly, you got to take action on late payments. So say that you got a late payment hanging over you. Here's how you tackle them. So number one is you got to pay off that bill. Late payments sting, but catching them up can prevent further damage to your credit score. So if you're late, aim to pay it as soon as possible. A 30-day late payment isn't as bad as a 90-day late payment. And the next thing that you can actually do is negotiate with your lender. So don't be afraid to call your lender sometimes. Sometimes they're willing to work with you if you explain what's going on. They might set up a payment plan if you're lucky and remove that late payment altogether. And if you're feeling really lucky, you can actually request goodwill adjustments. So if you've already paid a late bill, try asking for a goodwill adjustment. So some lenders might be willing to erase that late mark from your credit record as a one-time courtesy, especially if you've been with them for a long time. And lastly, dispute inaccuracies. And don't forget to dispute inaccuracies. There's a lot of credit reports out there that have bad information on them. So if a late payment doesn't look right to you, dispute it with a credit bureau. Now, under the Fair Credit Reporting Act, they are required to investigate within 30 days. Now, clearing up an error can actually mean a quick credit score boost. We actually did this with a customer of mine. We sent a certified lender to the utility company to verify that the debt actually belonged to him, and we were able to get that overturned, and his credit score jumped as a result. Now, if you see any accounts that are in collection, it means that the debt has been sent to a collection agency. It's actually a big red flag. So collection accounts can actually drag down your credit score, but if you do it right, you can actually manage them pretty effectively. So what you need to do is you need to review each collection and prioritize getting them taken care of, even if it means calling up the collector and working out a payment plan. And sometimes you might be able to negotiate with them. So some agencies might actually even remove that collection from your credit report and have it deleted if you ask nice enough and if it's within their policies. So make sure that you're always asking. But in order to get to that point where you can ask, you got to pay it down to zero. So if you end up with a collection on your credit report, it's not the end of the world. Mistakes happen. And if there's an account in collection that doesn't belong to you, file a dispute with the credit bureau. They have 30 days to respond to your request. So it's actually a pretty straightforward way to get errors removed. Another thing that you can do is you can actually negotiate for the removal. Sometimes collection agencies are open to negotiating. In exchange for paying off the balance, they actually might agree to remove the collection from your credit report altogether. This is called pay for delete. So here's the thing is you got to make sure that you get everything in writing when you're talking to a collection agency to avoid misunderstandings or to make sure that they do what they said they're going to do. So really quickly, another quick story. So I had a client named Susan. So her credit score was about 50 points lower than where we needed it to be. And we noticed that she had a $7 collection from a department store on her credit. So she said, yeah, I'm just going to go pay that off right now. So she called the collection agency while she was in my office. They agreed to delete it as long as she paid her balance in full. So she got a deletion letter 24 hours later. She gave that to me. I gave that to the credit agencies and her score jumped almost overnight. Paying off a collection actually shows some responsibility, but it doesn't automatically erase it from your credit report like it never happened. After you pay, try disputing the collection again. The collector might not respond, and it could actually end up getting removed that way. So maxing out credit cards is like trying to run a marathon with weights tied around your legs. Now, it can really hold you back. Now, your credit utilization, or once again, how much of your limit you are using, once again, makes up about 30% of your credit score. Lenders see high utilization as a red flag. So solution is aim to keep your balances under 30% of your limits. So once again, for example, if your credit limit is 10,000, try to keep that balance under 3,000. Slowly working your way down from those highs will actually help you and make your credit score look better along the way. All right, so let's talk about one of the hardest things to work with on your credit, and that's bankruptcies and foreclosures. Now, bankruptcy or foreclosure on your credit report is like a big flashing warning light and sign for lenders. These can actually stay on your credit for up to 10 years. Now, so it's worth double checking each one of these items for accuracy to make sure that it actually belongs to you and everything from the bankruptcy was reported correctly, because you don't want to get dinged for anything else that you don't need to. So once you do check for accuracy and you find out things are correct, the next thing you can actually do is focus on building up positive payment history, moving you forward. Now, this is going to take time, and steady credit use will help. The reality is building up your credit actually might feel like a long road, especially when you hear other stories of people who are older than us who have already reached the dreamland of owning a home. So if you're thinking, how did previous generations do this so easily? Well, I'm over here hustling to try to build up my credit score. It is taking months, if not years. Trust me, you're not alone. Older generations have had years to build up their credit, and trust me, they're still making mistakes along the way. But here's the good news. You are on the right path now. Strengthening your credit now is like laying a foundation for your future home. Each step you take to improve your credit score actually brings you closer to getting into your next house down the road. Okay, so now you have a clear plan on how to tackle those credit challenges and actually boost your score. But remember, improving your credit score is just the beginning. So if you want to keep building momentum, this next video is actually going to be what you need. It's going to guide you through the next steps of the process and keep you on the right track to your new house. So thanks for sticking around to the end of the video. If you found this helpful, consider subscribing. Your support helps the algorithm share this content with more home buyers just like you who need guidance just like you did. Think of it as an investment in your education and a way to help others navigate their home buying process. Together, we can make the process easier for everyone. Until next time.